Well, this could be a part of the story as well, because we had a surprise move overnight that could help stocks here, appear to be, and around the world. China announcing that it will slash tariffs on $75 billion worth of imported U.S. goods. It will cut them in half, effective February 14th. The market likes it. Dow futures, Andrew told you, up nearly 100. Eunice joining us now live with more, a surprise move, either Eunice sort of a gesture of goodwill toward the United States, or maybe an effort to help their own struggling economy.
Or a little bit of both, Ryan. China sees this as a reciprocal move and perhaps as an indication to the U.S. that they will make good on their promises in this phase one trade agreement. At least that's the signal. Now, the Chinese move follows the U.S.'s decision back in December when President Trump had tweeted that there would be cuts of additional tariffs on $130 billion worth of Chinese goods, that those cuts would be in half from 15% to 7.5%. That's supposed to happen at 12:01 a.m. on February 14th. And the Chinese Finance Ministry today said that China was going to do the same, cut retaliatory tariffs in half at the exact same time. So these cuts are going to affect U.S. crude oil, cutting those rates from 10% to 5%, or no, I'm wrong. Sorry, from 5% to 2.5%. And it's also going to affect soybeans, pork, beef, and chicken as well. So the timing of the decision, though, hasn't been lost on many economists out here. Of course, it's still unknown exactly what kind of impact the coronavirus outbreak is going to have on the Chinese economy. And UBS today, one of the economists there had described the reduction of tariffs by China as fiscal stimulus. Nomura also said that this at least is a sign, perhaps, that is positive, that the U.S. and China will continue with what they described as a honeymoon period after the signing of the phase one trade agreement that could last a little bit longer. There have also been reports that China is looking for some flexibility on making good to its pledges to buy a lot of agricultural products. There were already a lot of questions as to whether or not China is going to be able to reach those goals. Now it looks as though there are some signs that maybe China is indicating it might not be able to make those goals. The Global Times, the Communist Party paper, had quoted a trade expert today saying that Beijing could consider the disaster-related clause in the deal, which would allow them to back out of some of these pledges.